1.3 trillion US dollar housing market crash. Is this going to happen? Now, back in 08-09 when this happened, many people were stunned, and of course no one expected it because everybody was in America knows that US housing will never crash. But of course Lehman Brothers has proved it nonetheless. But this time around, I'm going to see it once again. Now, I don't think so there'll be a crash, but I do expect this market to come off at least by 5%. And of course, what does it translate? That will easily means the S&P 500 will go down by at least between 8 to 10%. Let me share with you more in detail shortly, but disclaimer apply as usual, and thank you AIMS for all the kind sponsorship. Now, let's just go back and look at the US Federal Reserve. What did they say, right? So they increased the federal rate to 3.25%. Okay, that's what happened on Thursday in the morning. And of course, the initial jobless claim last night was still pretty okay. Now, do note, Jerome Powell will be speaking tonight at 2 a.m. Singapore time. So if you look back into the numbers, okay, you can see that, right, since the March period, okay, you can see that the sudden uptick of interest rate, and of course the way it gush up is very, very fast, because when it was going up back then in 2018, it was pretty steady, and of course the time it hit 2.15, the market already have tanked more than 30% from the highest point, and this time round we are just only about 20%. So that means that whenever you hike interest rates, you do have an impact onto the stock market. Yeah, this is something that you must understand. But the question is this: it is being hiked at such an alarming speed, right? Hence, therefore, the impact itself is not really felt at the moment. And that's the reason why I think that there is a little bit more downside to go for the stock market, especially this number is not going to stay here. In fact, the terminal rate is about 4.5%. So this is going to continue higher, as we can see over here in history. The last time we see about 5% was back in 2006, and that was before the Lehman Brothers crisis, okay? But you can see that the impact itself has its important aspect here itself. And of course, back in 1999, we also saw the same thing. It went past to 6%. And of course, back all the way to 1988 to 89, that was where it went up to almost 10%. So this is nothing new to the market. And every time when the interest rate goes up, we do see that it's a cyclical thingy. The stock market will pull back. So this is whereby many people are asking me, is it a good time to buy into stock? And I keep on reminding you guys, I say, no, no, no. In fact, for value investment at this moment right now, yes, indeed, you can buy something for dollar value for 50 cents. But the question is, this is not the time, because I think that we can get at 30 cents. And of course, to buy at 30 cents will be a better deal than buying at 50 cents. Don't you agree with that? Okay, so that is my personal take. Let's just look at what the market sees and what is happening. Now, this is the Federal Reserve dot plot and versus expectation. Now, the one in blue is pre-July payroll, whereby they expected the interest rate to still go up until March period 2023, then it taper off. Okay, that was pre-July payroll. Then we have the post-July payroll, which is about the same. So that means that before we saw the numbers recently, most of the people are expecting that the interest rate will be up for a moment a few times, and then after that there should be some it will stop and it will pull back, right? Okay, so that is basically what people are saying. But the problem is now the latest US Federal Reserve FOMC meeting, we saw something different. This time around, the Federal Reserve dot plot is actually looking at probably 2024. My God, okay, this is March 2023, right? They're looking at basically 2024, then maybe the interest rate hiking will stop, and then after that it will taper off. Oh my God. So that means that the whole thing is that it has been prolonged by at least a year. Now, what does it mean then? That means that we're going to have a lot of problems, because that means from this area here, right here itself, right, it's basically things that the market expect but what the Federal Reserve is looking at. So if that's the case itself, that's the reason why Federal Reserve Jerome Powell said there will be more pain coming in, and it's kind of expected. Now, of course, if once the Federal Reserve start to cut the interest rate, then what will happen? Then that will be a good time. So that's the reason why I felt that right back here, 2024 will be a very good time to buy into cryptocurrency. Yes, indeed, I still think that the winter period for this Bitcoin will still drag until next year. And of course, in 2024, we have the halving effect. And that's why I believe that that will be a good time to really collect some Bitcoin. Now, I still look at Bitcoin BTC, BTC, write it out for you, BTC. I still think that BTC will still go down to about 16,000, okay? 16,000 first. And of course, if it goes any lower, it'll be even better price, okay? So that is my view on the current aspect of the market, yep. Now, the Federal Reserve, as we can see right now, has made a jumbo interest rate hike of 0.75, and very good chance they're going to do that again. So what are the 4 things that is likely going to be more expensive? I want to share this with you right now. Now, first of all, we're going to see credit cards. Now, a lot of people are actually using their credit cards now after they have finished their money given by the government, right, in US. So if, let's say now, if your annual percentage is increasing on a basically almost every 2-3 months basis, then definitely it's right. This is going to hit the pocket, right? So think about this. It's, of course, it's interest on interest, because if you don't pay the interest, the next month is right, you're still going to pay the interest, and on top of that, the incurred interest. So this is going to be very, very bad for any consumer. All right, and of course the auto financing will be hit. Like example, your car loans, your financing, it's going to be hit. All right, because now imagine in 2022 the average cost for a 60-month new car was 3.85%. Now, if let's say the interest rate keep on going upwards itself, right, and it may go all the way to 5.5 to 5.75, that means that it's going to be extra money for you. Now, of course, you may say that this is just a little bit more. Well, every bit counts, because it's going to be across the board. Everything is going to go up across the board. So that's something that you must pay attention detail. Now, the next thing is the big one, the big ticket, the mortgages. So think about this, right? In 2022, the mortgage rate was about 3%. Now it's about 6%. So imagine that if you were to do this as well, right? Oh my God, your increment will be at least about $500, just like this. So think about this. Imagine the person now is really living by to the means of it as well, right? Really having problem to meet both ends, and now you have to increase it. And the thing is that is just only the interest rate. So think about this. What if the property prices go down at the same time? Now this is going to be bad, because if your interest rate is going up but your property valuation is going down, you will have to top up the difference. And this is why by all the other variable rate loans, right, whatever loan you take from the bank will be an issue. And that's the reason why this is scary, because if this continue, it may go up all the way to 8%, and this is going to break a lot of people. All right, so that's the reason why you need to be careful. But why is Federal Reserve doing this? Because the thing is, the inflation is still mounting up. Look at it. This is from Bloomberg, and this is all the measurement, excluding transitory rising price at the new peak, right? Which means that you take it less food, shelter, energy, and used car and trucks, and it's still going up in this alarming speed. So now think about this. If the food is something that we have to continue to eat, we need to have a shelter, and obviously lesser people will be buying houses. That means that the rental costs will still be high. And let's say come the winter period, whereby I shared this with you before, that there is a chance that the energy prices will be going up. So this is going to be bad, right? So food prices going up, shelter going up, energy going up. Oh my God. How do you think that this is going to help? So that's the reason why I think that there will be further upside coming in for the interest rate environment. And this is actually leads to this $1.3 trillion US housing market, okay? And according to some report, is saying that this is imminent and it's inevitable. Now, I don't think a crash, okay? I repeat, I don't think it's a crash coming in. I don't think so. But undeniable, we have a very good time in January, right, this year, and everyone around me will say, okay, Cal, it's time to buy. And as you can see, the Singapore prices, the property prices going up, right, $1.3 million for just HDBs. But the thing is this, when you have a good time like this, you must understand you will have to come back eventually. And truth be told, right now, the numbers are coming down in America. All right, let me just get, okay, 1 minute. I'm having some technical issue here. Okay, hold on. Okay, so what is happening right now is that the housing rate now could lose as much as 4%, okay? And we all know that, right, the unemployment claims and layoff is on the way. Yes, indeed, because Federal Reserve is going to hike interest rates. So when that happens, business costs will increase. Undeniable. That means that employment will be reduced. And when that all happens, more layoff come in, lesser people is going to can afford the house. Things will happen. It's a spiral effect, and you will have a repercussion. And just hope that there's no more pandemic, because there's going to be one more pandemic, the market would not be able to take it. All right. So that is something that you must understand what likely could be happening later. All right. So that with that understanding itself, right, you can see right now Goldman Sachs is saying that, right, the US housing market really go for worse for 2023. And of course, we have JP Morgan coming in also. They believe that there's a market fall for the housing market. And of course, just moments ago itself, right, we have Jerome Powell himself, the man himself, warns of correction in once red hot housing market. So all this thing is going to have an impact. And you can talk about stock market, earnings and stuff. People can buy on speculation. But coming to property, there's something you cannot deny. When the market really want to fall, it will come off. And this is why I can feel that this is not going to be nice and traders will be hit. So we can see right now, right, from the chart, you can see very clearly the existing home sales has dropped a lot. Now it was at the index was at about 6.5, okay, at one stage itself, 6.2.3, sorry, bad. But now it's at 4.8. That means a drop more than 10 to 20%. And you can see now the existing home sales median price is coming down. Now I repeat, a lot of people say that, but Kel, isn't that a good thing? If the price is coming down, isn't that a good thing? You're wrong, my friends. If you never mortgaged your house before, that means that when you mortgage your house, okay, the bank will give you a valuation at this current price, okay? Then the interest rate involved. Now usually the interest rate will be a variable number. So if the interest rate goes up, right, you have to pay the difference, okay? That's the first thing. And of course, if the property price is still going up, it's fine. But when the property prices is coming down at the same time, this is where the crux come in. That means that you have to top out the difference. And if you look at it into history, you can see right here in 2007 and 8, that was whereby the property price was going up, the home sales was increasing very nicely. Then after that, in 07, 08, when it started to come down itself, right, boom, that is where things all happen, right? So now we are actually seeing the same thing happening, and you do not want to play with this. And this is the reason why I can see why Federal Reserve now is in a big hurry to get themselves out of this, all right? It's undeniable. So with that understanding, we can see right now that the new home sales, the high borrowing cost is going to hit, and the thing is that the home builders are also holding back, and obviously we can see that it is really unexpected, okay? Although the construction is still going up, but we all can see that the numbers are not following through, okay? So that's the reason why things is all happening right now. And of course, okay, if this is continue, all right, where supply demand comes into the picture itself, right, people will also think carefully, okay, you know what? Let's just cool down for a while. So which means that people go back to more to the rental side, and that will increase and that will remain high. And Jerome Powell say, hope for the best and plan for the worst. So from a guy who leads the Federal Reserve is telling you this, what do you expect to see in the near term? So all these things tells us that US housing is a big concern right now. And of course, what will lead to the stock market, right? So stock market, according to Goldman Sachs, they are now looking at 27% drop. Now, I'm so sorry. I mean, I cannot really trust what the boys say. Usually these guys, because I'll tell you more in short detail, because these guys, right, they can write all they want, okay? They're saying that, right, from this Dominic Wilson, he's saying that, okay, if the unemployment goes up to 5%, now it's at 3.3%, the S&P 500 will drop by another 14% to about 3,004. Now, and of course, the yield will be 5. The yield itself will be at least much higher, right? Okay, and he gave a more severe scenario. He said that if the jobless rate actually goes to 6%, oh my God, the stock market will drop by 27% to 2009. I'm so sorry. I don't know. Okay, I'm still right behind my ears, but I don't think this will all happen in such a magnitude. And because you can see that, right? Don't forget this out. Goldman Sachs, remember at the start of the year, they know all this, and they already tell people that the market will go to 5,001. Now, do note, at the start of the year itself, right, remember, a lot of people were saying that the market will go up by the next 6 months, which I personally also said that. But during the July month itself, I started to waver on this area because I cannot see how could that happen, because the US Federal Reserve is that determined to really want to hike their interest rate, and the inflation did not come down, and it went past to 9%. So with that, a simple understanding here itself, right, it's undeniable that we are going to see more rate hike. And if there's going to be more rate hike, then how can we have a environment that is going to go up, right? That's not been proven. So now you can see now Goldman Sachs actually says that in the mid of the year itself says that the S&P 500 will go to 5,100, but now today they're telling you 3,400. So you see, guys, this is something that I really don't like. These are the professionals, and if they can't even get it correct for themselves, what do you think for the rest of us, right? So unless that they did it on purpose to sell us the wrong stuff and they get us hit, well, all for you to decide. Yeah. So at the moment now, undeniable, we have a problem because the S&P 500 is trading now at the bear territory. Yes, we are trading at the bear territory right now. This is crazy, guys. Think about this. The S&P 500, the peak itself was here. Let me just bring to you now. The peak was here back in January, the first 2 trading days. And let me just move the chart a bit higher for you guys to take a look. Moment. Here we go. This is better. And what happened? Okay, so you can see that this is the all-time high, right? And we have the 95%, we have the 90%, 85%, and this one 85, right? Okay, so what happened was the market came down all the way, and then it hit the 80% mark brilliantly, and where it stopped. And of course, the RSI was at 30 range, so the market rebounded. Okay, pretty cool, right? But then it didn't stay up long, and the market came back down, and this time around you can see it went and sliced through the 80% mark, which led the market down by another 6 to 7%. Okay, sorry, down at 4%. Sorry, my bad. It's about down about 4%. And then that was where it actually had the RSI at the bottom again, and it bottomed out. Okay, this time around we have a very strong rally, and it went all the way above the 85% mark. At one stage itself, many people were saying that this could be the start of the bull market, and I totally disagree, because to me, this is very clear. Let's do the simple maths, okay? Let's just do this, okay? Let me show it to you right now. Now, just take a look here. If we look at it in another way, if this is basically the 100% mark, this is the 80% mark, the midterm itself is at 90%, right? So 90% is here, which is like the Fibonacci 50%. So if the market came down all the way to the 80 and rebounded but couldn't pass a 50, then I'm so sorry, the market will come down instead. So I believe that the market is going to come down and break this low once again. Now, of course, intermittently, we are near the RSI at 30 range. And of course, usually the technical buyers will come in. But if you look at it, right, I don't think so, because we have a very strong selling on this particular day. Hence, therefore, I believe that we should test 3700 first before we see any form of support. And of course, in the longer term, as the Federal Reserve hikes rate, this number will go lower. So in fact, I still think that the S&P 500 will still go down to 3,600. Yes, indeed, it may even drive down lower, but then again, we'll do that next time, okay? So you can see now from the chart itself, we are actually in a pretty bad position for today, okay? All right, so with that as well, right, let's look at the charts and see what can I offer for you today, and hope you enjoy the session that I'm sharing with you this today. Okay, now let's look at the charts. Okay. So now we have the China market. The China market is really, really bad. This morning, it tried to stay up, and it actually tried to go above to the 13,000 psychological barrier, but failed. And in fact, you can see right now, it didn't cross the trend line effectively. This is the trend line that I have for you, that I showed you the period. Let me just bring to you, make it smaller. Now we can see that from all the way from 2015, this is a trend line all the way up, and you've been a very strong support, right? Okay. So the thing is this, I tell everybody around me, I said that if the China A50 fail to stay above the trend line, there will be selling. And now we have a clear rejection. The market went up, but now it's rejecting it and it's coming down, and that means that the China A50 could be going down to 12,650 range, which is another 200 points from where we are right now. And would that drag the entire market down? Yes, indeed, it'll definitely drag, okay? Now, of course, this is the S&P 500, the chart you showed earlier, and obviously we have the Dow Jones right now. The Dow Jones has tried its best to stay try to stay above the 30,488, the midpoint, but we can see that it didn't, and now it's likelihood there's a very, very high chance that the Dow Jones is going to go down to my 80% mark, and that is the 29,563 level. And that is the elusive level that we're waiting for. We've been waiting since June. Well, you saw the market went against us quite a fair bit before it come back down. So this time around should be able to reach our target. All right. And for today, okay, let me just bring to you right now for today. Okay, for today's our chart. Okay, let me just bring it to you. Now for today, we can see right now the MLP is at 30,143, which just now the market has tested it and pulled back. Now when the market tests MLP pull back, usually there will be some selling. And because yesterday the market still closed down with a doji setup for today, KSI red, KRW red, so which means that if the market stays below the BNB SL level, very good chance the Dow Jones can really tap 29,777 tonight. Yes, indeed, you heard me clear, tonight. Because the pivot 2 is 29,736, right? So in my opinion, if the market stays below 30,000, there will be a good chance that there will be a flush it down all the way to 29,777. All right, let me explain more in detail to you by seeing this chart here. Okay, let me just bring to you the S&P chart, and you can see the cash market. There's something that you need to take note, okay? So you can see over here that, okay, make it bigger a little bit. Oops, wrong chart. Moment. Okay, here we go. Okay, so what you can see here is that the last few minutes, like last 10-20 minutes, okay, you can see that about basically the last half an hour there was a sudden increasing volume coming in, okay, and we thought that this could be like the market have sideways for quite a few hours, and there's some buying towards the end. We thought of bottom buying, right? But the thing is this, you can see over here it was pump up. So that was where the last 15 minutes everybody thought that, okay, this is gonna be good, right? Because it seems like it's buying up, that could be bottom fishing. So the volume also kicked in quite a fair bit, about 53, all right, the volume 53 mil. Suddenly the market just dumped and dumped and dumped. This means that this pump up is actually fake. This is the real intention. And if that's the case itself, right, you can see it happened again yesterday. I just showed to you yesterday. You can see right here the same thing. They actually dump all the way down towards the closing. You see that heavy volume selling towards the closing yesterday. So which means that we have a second time it happened like this. This actually spells that the boys are dumping it towards the end. So why? That means that they are really trying to get out. This is no joke. It could be done by the machines, it could be done by the algos, but it doesn't matter. That means that there are people trying to get out. So usually, based on my experience, on a Friday and a Monday coming in, there could be a spillover and things can get drastically bad, okay? This can be, all right? So traders, be very, very careful, okay? Be very, very careful. Now the Nasdaq for today itself, we can see that it's also trading downwards. It's below the support level, and it's failed to cross the MLP 11,547. Now earlier I want to show the Dow Jones again. Let's just show the quick one. You can see over here the Dow Jones just couldn't stay above the MLP zone. That's why now it's coming off. All right. So MLP is a very powerful thing according to the TWB system. Okay, so for today's the Nasdaq, still the MLP for Nasdaq and the KTR plus one is a stack, so which means that it's a very strong resistance. Now if the market loses this level right now, there's a good chance that Nasdaq will drop down to 11,400 or more based on the chart here. We can see right here now, and it could bring it down all the way to 11,309 because this is happen to be the same with the KCB at 11,300 as a stack over there. S&P 500, well, BNB shows that this is a second day, so that means that 3735 is inevitable. The KSI and KRW both are red. MLP 3769, and today the S&P missed the MLP just by less than a fraction of, okay, miss it, and then the star was there, boom, selling comes in. Okay, so this is something that we must take note. So all this tells you our system is pretty cool, right? Okay, so that is the next number. Hang Seng, Now, Hang Seng has today's a doji directional day. By right, we are expecting a recovery because the market is above the pivot 1. But now what we have is that the market is staying below OP. And if the market breaks below 17,910, there is a possibility it may drag it all the way down to 17,590. Now, do note, the Hang Seng has not dropped below 18,000 for a long while, okay? And now it's trading below it, and there seems to be no reprieve at all. This is scary. Nikkei. Now, yesterday we saw the BOJ intervention, and we saw the Nikkei swinging. My goodness, a big movement there. But still, end of the day, it did not have anything. It ended near flat level. So today, MLP is 270.88. Hence, therefore, the market will have to take note of the key figure of 26,732. That means that if the selling continue, there's a chance to see 26,732 coming in. Both KSI and KRW both are red. Okay. Now, crude oil continue to maintain on the downside. Yes, you heard me. It's on the downside at the moment right now, because you can say yesterday we have a recovery to about $85.83, but after that, towards the end, zoom, they came back down. So that shows that they are trying their best to combat inflation by bringing the crude oil price lower. So if the crude oil loses a support at $82.40, there's a very good chance crude oil can come below 80. So traders, watch out for that, okay? This is all very important figures that you must take note. Yep. Okay, how about gold right now and silver? Now, for silver, it's still maintaining its foot very well, and I strongly believe that any pullback in the future is a great time to buy some silver. This is a very classic sign to tell you that silver is not coming down. Somehow, someone is definitely hoarding it, okay? And today, we have a DJDD set up for this gold market, and okay, let me just get the thing up. The thing is not refreshing properly. Moment. Okay, yep, here we go. Okay, today there should be no doji for for today. Yeah. Okay, so today we got a pivot. The market opening price 1670 will be the key decider. If it stays above 4p, the upside could be 1687. If it stays below OP, then the 1654 will be the support. Okay. At the moment now, MLP is 1671, where we are right now here. So the market should be sideways for time being. Okay. Last but not least will be the two cryptocurrency before we end this session. Now take a look at this Ethereum. Now Ethereum is trying to rebound after it hit the 12520 level, the support at 1250. KSI is still red in color here. KCX is still blue, so the downside is still there. 1319 will be the main support for today. Now, Bitcoin is recovering a little bit. It went down to the low of 18,14150, rebounded strongly. Now, why is that so? Because you can see the boys are still buying. So every time the price comes down, seemingly someone is just buying a lot of Bitcoin. So the good part is, yes, indeed, it may actually go up from here. But if you look at it, right, this big sell-off is not small, and based on my understanding here, it's a very good chance it still will break 18,000. So maybe over this weekend itself, be very careful. You never know, because Bitcoin love to move on the weekend. If they move downwards, that could actually spill over to Monday's market, and that could freak some investors out. All right, if that's all these things to happen. Okay, all right. So that will be all for today. I wish you all the best in trading, and I wish you a good weekend. This is Kel signing off. Bye bye.